Hi, Julie. Thanks for coming in and let me share with you what's going on with Cover Oregon. So I'm sure you have some questions.
I do. I've done a little bit of reading about the Affordable Care Act, but in all honesty, I'm one of those people that I've been healthy for the most part. I just do preventative doctor visits, and so I've honestly waited till the last minute to get signed up. In the media talking about everything with the website Cover Oregon, and I didn't really want to go explore that. So it's helpful to actually come in and talk to somebody one-on-one that can walk me through the process. But I have waited till the last minute, and I have some reservations. And I don't, one of the reservations that I have is that I'm self-employed. I'm a sole proprietor, and my income fluctuates from month to month, from year to year, and I had seen that, basically one of the things that you have to do is plug in your annual income, and mine varies. So what do I do about that? How do I decide on a plan?
Okay, well, it is a bit of a complicated process, and there's a lot of various information, some misinformation out there in the public, so we can work you through that, and we can start with working on what your medical needs are, how you use insurance, and compare those plans. It's partly it's your pocketbook, it's partly how the Cover Oregon rater or calculator will determine where you fit based on your income level. And of course, this is all a projection for your 2014 income, and of course, being you're self-employed is an unknown. And those things can be modified or adjusted as you go on through the year. If you have get some good work and your income goes up, then you'll be able to adjust that, and they make a redetermination based on what your income change is. So
I'm guessing right now, I'm making a projection on past years, how much I've made, and not knowing that, how much can you make, I've heard a little bit about this, and still qualify for one of these plans through Cover Oregon?
Great question. The lowest level is a little bit over $15,000 per year will enable you to be in a qualified health plan, that and on up. The great thing is that we no longer have to worry about the pre-existing condition issues, and which was a big hindrance to getting coverage for people.
Subsidy, what does that mean exactly? I mean, you don't, until you actually plug in numbers, you don't know what plans are going to be offered to you and how much monthly premium you'll have to pay, and it's going to vary based on your income. Not on, correct me if I'm wrong, not on your prior health. You don't have to fill out a health statement and have pre-existing conditions. So it's based on your income. But what does subsidy mean? What are you talking about, subsidy?
The technical term is advanced premium tax credit, which results in, after the determination is made, a dollar amount that you would receive to reduce the cost of your premiums. So for instance, if you get a $50 advanced premium tax credit, then, and you have your plan choice was $200 a month, you would then be net payment of $150 a month. And the way the government or the plans look at this is we are tax filing units. So if you have married filing jointly with a child, then you have 3 people in that tax filing unit.
Okay, you mentioned tax filers. I am married. My husband has coverage, but I need coverage. So how does that work? I mean, if you're single, if you're married, as far as your application and application process.
Okay, well, we would start with the total household income. That's one of the parameters used, and then we list how many members in the household and the annual income, and then drill it down to how many are actually going to participate in applying for a health plan. So it could be just yourself, or it could be a child too, if there was a child in the household. So whoever's applying for, we start with the total household members, total household income, and drill it down to who is actually applying. Because oftentimes you have one person who may work for an employer who provides all the rest of the family, and you're the only one that needs to get in. So the system is pretty robust and allows for a lot of variations of who's going to be getting the insurance and who's not.
So how does it affect the application process if you say you are married and you're filing as a single? How do they look at it as far as your income and the application process?
Well, in a situation like that, they would take each person, even though they're married, and if they're filing singly, they would take them each as a separate case, and they would both stand on their own merit of income and age for the final determination.
Okay. Tax credit, when you use that term tax credit, I think about at the end of the year when I'm filing taxes, if I'm going to get a tax credit. But what you're talking about is you actually have that premium reduced on a monthly basis throughout the year. Is that correct?
That's right, yes. Taking that thought just a step further, many people qualify for, let's say it's $100 a month, and they don't start their insurance till maybe the third or fourth month. So those previous months that they have not actually used up the credit will, as we've been told, end up on their filing at the end of the year as a credit.
Really?
Yeah.
So having waited, now if I end up signing up and I'm not eligible, or my insurance doesn't start until April 1st, then I actually have 3 months of credit that will go towards my end of the year tax return. That's your understanding.
Current understanding.
Okay.
There's been a lot of clarification as we've started this whole process, so there's still things that are a little rough.
What's the difference? I mean, obviously I'm able to sit here with you and talk about this one-on-one, which to me, I'm computer literate. You know, I'm on the computer every day. I just had not wanted to go that direction. So what's the benefit right now of signing up here with you?
Well, it's probably faster to do the whole process if you haven't ever done it. And additionally, I don't think that the consumer can go on direct themselves anyway, so it's still pretty much relegated to going through an agent if you're looking for the subsidy through the system. So, and just the fact that the agents have done a lot of these now, and they're able to go through fairly, if they know their stuff, should be able to go through fairly quickly to get to submission.
In the past with health insurance, not only have you had to go through the process of filling out a health statement and being accepted to a plan, but your rates could be increased at times, and you had mentioned earlier that you're projecting at the beginning of the year, if you're self-employed, how much you're going to make. Mm-hmm. So if for some reason my beginning of my year, which it often is slow, and things pick up in the middle of the year and I start having a substantial increase in my income, what is the process? What do I have to do?
Well, the current standard or protocol that they're using is to, if you've had a significant change in income, is to contact them, discuss the issue or the change in income, and then Cover Oregon and the analysts there will then take and make a redetermination on your situation to see what your new fit is going to be, if you get more subsidy or less subsidy, and go from there.
So as far as you know, that would be something that they would determine as soon as they were contacted?
Yes.
And then it would go into effect as soon as they could get the paperwork through?
Yeah, probably
within a month
following month. Currently, their cutoff is the 15th of one month for following the first of the next month. And theoretically, you could be late in the month and might be, if we're doing March 25th, your change might take effect then on, say, June 1. Mm-hmm. So, and we had not gone through these processes yet, so I'm speculating.
Okay. And if you are subsidized, what plans are available? Who are the carriers out there for Oregon?
Well, there's, I think there's either 8 or 9 from Regents, and not Regents Direct, but they're Cover Oregon product known as Bridge Span. Mm-hmm. And you have the LifeWise, you have the Pacific Source, MODA, formerly known as ODS, and HealthNet. We have Trillium, based in the Eugene area, And then we have our two co-ops. Those are the Health Republic and Oregon Co-op. And we are the only state that has two co-ops at the moment.
Okay, so that's a little overwhelming. I didn't know there were that many companies that you could actually go with and be subsidized. So having an agent to walk you through that is better than having to try to figure that out online, I would think. So how do you go about choosing the right one for you? Do you have a panel of providers for each of those carriers that you have to see a specific doctor?
That's a pretty good question. What we're finding is what generates people's choices of which direction they want to go. Price is always the frontline consideration, followed by the what providers are available. And there's been a lot of repositioning of what companies are doing with their provider networks. And so that's kind of turned the whole world upside down. And one of the things we do is help people figure out, if you know what doctors you're using, what area they're from, and sort through and see which of the companies has the provider panel that they need to get their care. Because having a doctor is kind of a personal relationship, and most people don't want to change if they've already got one established.
Sure.
So Jackson County area is kind of unique in that most of the companies have most of the providers available. Throughout the state, though, there's quite a variation and changes in who's in which network, which does make the research necessary.
Okay, so do the plans, that would bring me to the question, if I sign up with the plan and I haven't done the research and I find out, well, my provider that I've been seeing for 15 years is not part of this network, do the plans offer a different coverage if you see an out-of-network doctor? Are there two different levels of coverage if you're in network versus out of network?
Yes, that's true. There is two different levels of coverage. One of the carriers out there has a two-tier network, so some providers in the first tier where you have less out-of-pocket, or the second tier, as well as most of the companies have a in-network for their providers and out-of-network coverage. Any provider, or I should say any company, with their out-of-network plans, the customer is going to have a greater copay, greater out-of-pocket maximum when they use these out-of-network providers. So sometimes it's very appropriate to use an out-of-network if, say, the other doctors can't provide what's needed.
Sure. So I understand that I heard a little bit about the packages, not any real details other than the fact that they were gold, silver, and bronze. So what does that mean exactly?
Well, what it means is there are actuarial values assigned to each of these plans, with the bronze plan, which is the least beneficial. I shouldn't say least beneficial, it has the highest upfront cost to the customer with a high deductible and very few copays, if any. So each one has an actuarial value assigned, bronze with a 60%, silver with a 70%, gold with an 80%. And the silver plans, just as a side note, are comparable to what most people were purchasing prior to the Health Care Act coming in. So now, each of these programs, or metal levels is what they call them, has a standard. There's a bronze standard, silver standard, and gold standard with their 60, 70, or 80%. Any plans within those groups, any of the silver plans, for instance, are allowed only to have a 2% plus or minus variation of the benchmark, which is the standard. So although they may look quite a lot different, you'll give and take some of the benefits within them, and actuarially they're in the 80% range or the 90% range, whatever it might be. So, but it's easiest to identify them with gold, silver, and bronze.
Okay, so do each of these packages look like a typical healthcare package in that you have to pay a premium, or your premiums obviously, but I mean a copay when you go in to see the doctor? You have your out-of-pocket expense. and maybe a deductible you have to meet as well?
Yeah, they look just almost exactly like the traditional plans. They're beefed up in their benefits. Mental health is included in all the plans, as well as certain preventative cares that were worked in gradually but now fully implemented into the plans. So they're basically richer plans than what people were able to purchase in the past.
Okay, so a lot of plans in the past have had the option, even if you had to meet a deductible, to have an annual physical or female annual exam. Is that still the case with these 3 metal values? You can still go no matter what plan you have and have that without having to meet a $500 deductible or a $1,000 deductible or whatever it is?
Absolutely, yes. Those benefits under the preventative care section of the plans, those are included at, there's no copay, no deductible applied. It's all there up front to use. So that's part of the focus of the Health Care Act, is to get more preventative care available so there's no financial barrier for anybody.
So the bronze plan, being the lowest plan, you said though, is the most out of pocket, so has the highest deductibles. Would it be fair to say then that your premiums are going to be a lot lower per month maybe on the bronze plan, but you're going to have more out of pocket because you're going to have a higher deductible to meet?
Yeah, that's exactly right. The bronze plans, technically, the bronze plan's maximum out of pocket is pretty much the same as the other plans. It's loaded heavy on the front end with your deductible. So if you have stuff going on, yes, you will pay more out of pocket in the very beginning.
So is it fair to say that you might choose a gold plan, the higher end, where you have you're paying a lot more premium, so your monthly premium is higher, but your out-of-pocket expense is much lower? Your deductibles are lower, your copays are lower. Is that the case?
Kind of, yes. I look at it more as like a cash flow difference. With similar medical events, your bronze, your cash flow is going to be higher out of pocket, and the gold will make it go a lot further. But if you have a really, substantial medical event, maybe had a surgery, an operation, you're in the hospital for a couple of days, you would max out any of the plans, which their maximum out of pocket are all in a similar range.
Would you want, let's say you did have a lot of medical issues, you know that you go to the doctor quite a lot through the year, if you look at your history, do you think it would be beneficial to go with a gold package, even though you have higher premiums? Even though the out-of-pocket you're saying is the same for most of the metal values, your premiums would be higher, but would it be beneficial to go with a gold plan if you're going to the doctor all the time?
Well, that's where it turns into a math problem, and we get out the calculator and sit down and go, okay, what type of procedure are you going to have? What do you think it's going to cost? And what's the difference in premiums versus the gold and the bronze, to see how it all pencils out. So quite often we have to do that to see,
Sure.
which one. Gold might look better, but on paper, when you run it out with the math, maybe the bronze actually will do you just as good in certain situations.
So that's why somebody should come and talk to you.
That's right.
Instead of going to the website, because I can't imagine on the website that you're going to get that kind of feedback as far as making a calculation, really getting to know the individual and what their needs are. Their individual needs are in order to determine the plan.
Right, yeah. It's just it's a different way of thinking or looking at the problem, and sometimes people they have one perspective, and we help them give them another one and see how that works.
After this question and answer session, I felt very comfortable going online with Steve's help. He laid out all of the plans for me, and in about 20 minutes I was able to select a silver plan. And I have affordable insurance, and everyone out there can have affordable insurance through this cover organ with Steve's help. He has an office in Ashland and in Medford, so get signed up today.